Welcome along. I'm Greg Watson and I'm recording today via the social media network of Blab, which allows people to interact with regards to questions, and as well as that they can join in for a chat as well on the screen if they choose to. Today the topic is what insurance should I have on my rental property, and I'm just going to put in the messages the good links to more information about investing in residential property. So the first site I would recommend would have to be my own, of course, which is watsonrealestate.nz. So I've put that in the chat if you want to go to that. Also in the chat from earlier on, I've put a link to more information, which is about the insurance information for rental properties in general. The interesting thing with having insurance on rental properties is that a lot of people don't realise the fantastic leaps and bounds forwards that insurance has made in recent years. In particular, and Max, you've just reminded me to let my folks know as well, so I'll just let my network know that I'm online. So with regards insurance on rental property, there are a lot of people I work with who live in their own property and then decide to rent it out. And the insurance that you have for living in your own property is significantly different to that when having a rental property, but a lot of people don't realise. When you live in your own home, you tend to have building insurance in case there's something like an earthquake or a fire, and probably, I would hope, contents insurance for the things that can't be, well, all of your chattels, belongings and so forth. And by chattels, I mean things like curtains, light fittings and those sort of things. So if there's a house fire, for example, your house is rebuilt and then you have some contents insurance to cover the extra things. So we all know that's fairly basic stuff. Now, when you then rent out that home or rent a home out, it's still important to have the building insurance, of course, should a calamity strike. And it's also very important to keep some contents, but a much smaller amount than if you're living in the house yourself. The reason that the amount is much smaller is just simply because you're covering some basics, as I mentioned, light fittings, curtains, etc., as opposed to all of your belongings. Now, what a lot of people don't realise with residential rental property is that some of the worst case scenarios, for example, tenants who destroy a house intentionally, cause damage, etc., use drugs in a house and so forth, or if they stop paying rent and leave the country, those worst case scenarios are now massively offset by really good insurance. And the great news to talk about today is, at least in New Zealand where I live, this insurance is very inexpensive. And just to put that in context, it's about 300 to 400 New Zealand dollars, which is about 200 to 300 US dollars per annum to cover some extra things I'm going to talk about. Yesterday I was talking online about rental horror stories and tenant horror stories, so I thought this would be good to talk about insurance. So when you go to rent your house out, you add on to your building and contents some extra things or extra risks, if you like. So the examples of these extra risks are primarily the most common: loss of rent, which is any situation where the rent stops apart from a tenancy coming to a normal end. Okay, so that could cover things like a tenant living in a house who dies, a tenant who is made redundant from their job, and in our country the tenancy tribunal can release them from what was otherwise a fixed lease. Or it could be more sinister, like a tenant runs away without paying or simply decides to stop paying. Now, I think as an owner of rental properties myself that it's fundamentally unfair that owners should have to suffer for the things that tenants do in their property. It's just fundamentally unfair. The great thing with insurance is that you can insure against all of those possibilities from happening, and insurance companies probably won't cover a tenancy that comes to a normal end. So if a tenancy is due to end on the 30th of January, and then you have trouble finding tenants until 30th February, 28th February, I should say, then they simply won't cover that sort of thing. But if it's through a house being damaged or tenants running away, those sorts of things, they will cover generally the lost rent. So let's put some numbers and figures around this because it's more meaningful this way. If you are renting a property for $250 per week, the tenant stops paying, takes us 10 weeks to go through the legal system in order to allow us to move them on and re-rent the property. As an owner, you are out of pocket by $2,500. If you have insurance, the insurance company will pay all of that, but they normally have an excess of around 1 week's rent. So in other words, that $2,500 of loss that you've just experienced is actually those 10 weeks. 9 of those 10 weeks are paid for you. So that's fantastic. Now, a lot of people don't realise that, and they just run the risk without having this insurance in place. Remember, the insurance only costs about $300 to $400 per year. So that's loss of rent, and loss of rent relating to what tenants do. A good building policy, when you tell the insurance company that your home is rented out, will also cover you for loss of rent if there's something like a fire or an earthquake. But the other type of loss of rent that I've just talked about is to do with what tenants do or don't do at the property. So that's a bit about that. But what happens when you have your really horrific situations around what they call intentional or careless damage? Well, first of all, in this country, about 80% of all cases relate to loss of rent and only 20% or less than 20% to damage going through court. So it's unlikely that you'll experience large-scale damage, but when it comes to insurance, these things are worth talking about. I gave an example yesterday of somebody who chose not to take insurance. There was tenants in their home. The tenant had an extremely good background check, owned their own business, etc., and there was no issues there, but they got hooked and addicted to what we call P, which is pure methamphetamine. It's also in other countries it's called ice or crystal meth. So got addicted to that, stopped paying rent, and the house itself was contaminated. Now, I remember sitting in the lounge with those owners before the home was rented, suggesting they take some extra insurance as it didn't cost much. It was a nice home. They chose not to, and unfortunately, they, instead of being about $750 out of pocket, which are the excesses on the intentional damage and loss of rent, they were tens of thousands of dollars out of pocket. So for me, this insurance it's what we call a no-brainer. It's just simply what you should do. The situation with intentional damage can relate to things like drug use and drug contamination, which is quite a big one in the particular region that I live. But it can be something equally unforeseeable, like mental health issues, which is something that we cannot do background checks on. If somebody in a psychotic state causes significant damage to a property, holes in the walls and so forth, then that's something that you need extra insurance for. Also, if there were domestic incidents where there was damage, or even a party that gets out of control, these are things you need a little bit of extra insurance for. So hopefully you'd agree a little bit of knowledge is good. And as I mentioned earlier, there is a link to this. If you're watching the recording of this later, the link will be underneath. If you're watching now, the link is in the chat to the side. So if you have any questions, feel free to pop those in. Otherwise, I wanted to go back to building insurance for a moment. I'm jumping a bit between topics. So we started with building insurance, where I spoke about the need for building and contents. Then we jumped across to landlord insurance, where you can get loss of rent and intentional damage. Let's go back to the building policy. A number of building policies have an option in that you may not know about. And these are effectively little boxes that you can tick to say, these are some extra things I want covered. I mentioned earlier that when you rent a house out, you need to tell your insurance company that it is going to be rented. Unfortunately, the premiums will go up. We can't help that. That's just the way things are. It is a higher risk for the company. But there are two things which I've found really helpful with my rental properties with regards extra insurance. So on your building policy, and welcome along, Dave Stockley, he's joined us. So I'm just talking about extra things on building insurance. What is good to ask your insurer is if they can take an option to waive the excess on glass breakage. Now, the excess is the part that the owner of the property has to pay before the insurance covers the rest. So what we find in rental properties very commonly is that windows can get broken, and unless it's deductible, yes, insurance is deductible in the States. Thanks, Max. It is here too, and that's a great thing about it. It's not as dear as what you think, and yes, the excess would be deductible as well as the actual insurance premiums themselves. So the thing with glass breakage from a property manager is that we can visit a property and the window's broken. So you would think that would be the tenant's fault and they would have to fix it. But unfortunately, they could come up with a story. For example, the wind blew the window shut, a car flicked a passing stone, those sorts of things. And in those situations, it becomes very difficult to know whose fault it was. If a tenant says, my son kicked a ball and it hit that window, then that's easy. The tenant is responsible, they can pay. But if it's a little bit of a grey area, unfortunately, as a landlord, at least in this country, you have to pay the excess, that first amount of money, before the insurance company covers the rest. So what I've got on my properties that I find really helpful is I've ticked the box saying, don't charge me an excess on glass breakage. And what that means is it no longer matters whose fault it was, I don't have to pay. So I pay a tiny extra amount per month to cover that. And in return, I've had a number of broken windows that I simply no longer have to have any arguments about whose fault it was. So that's nice from a peace of mind point of view. One other thing that's good to have on your building policy is a similar concept where you have no excess on drains and sanitary, is what it's generally called, or blocked drains. You see, what can happen is, and thanks for the hands there. What can happen on drains is that, again, if you can prove that the tenants have blocked it, so in other words, tenants have children, there's a lot of soft toys shoved down the toilet, then you can prove what's happened, then they can pay. That's fine, no problem at all. Excuse me, I'm just losing my earpiece slightly. However, if it's a bit ambiguous, like you suspect the tenants are putting some food down the sink, or if they're maybe flushing too much paper down the toilet, well, then it becomes, again, very difficult to prove whose fault it is. And the default setting by your insurance company will almost certainly be that you pay the excess, that first amount, and they'll pay the rest when the company has to come and dig up the drains. So again, talk to your insurer if you have a rental property, because you can ask them to... thanks, Max is going to join us. So welcome along, Max.
Hey, thanks for having me.
Go on. Yeah, nice to see you. So I was just saying that the excess on drain blockage, you can actually talk to your insurer and you can ask for no excess. Now, the excess on some of those drain blockages can be quite high. They can be about $500, at least in this country. And again, I don't want to have to fight with the tenant about whether something is uncomfortable to talk about, as whether they've been putting too much paper or nappy diapers or that sort of thing down the drains. So all of this information is in an article I've written, and again, it's in the link there. So Max, if you were looking at purchasing investment property, getting this sort of advice up front, I think you'd probably agree is quite valuable.
Yeah. So on that topic, I definitely appreciate you doing these blabs. I mean, it's definitely very educational, particularly for somebody who might be coming, who's either brand new to property management or brand new to investing in real estate, or who has been doing it on a passive basis and now looking to do something a little bit more actively. Can you spend some time talking about insurance from the perspective of how much should an owner allocate towards their insurance premiums? What type of policies, because you basically mentioned building properties and then overall tenant type insurance. And then if you can discuss what those rates might be based off of, or based off of potential income that's going to be earned off of those. Is it based on the area? Is it based on the type of property, et cetera?
Okay, I guess just to preempt that, there's two types of landlord insurance you can get. You can talk to your existing insurance company that has your building and contents insurance and ask them to add on loss of rent and malicious damage. Or you can talk to a third-party company. In other words, they only do landlord insurance and they fill in the gaps so that you're very well covered. In terms of the expenses, and to widen that up a little bit more generally when you're looking at a rental property and income versus expenses, is you can work out what the rent is going to be in terms of the income. When you're working out your what we call a rate of return or yield, it's good to take the total rent that you're earning and then deduct things like the insurance. In other words, you need quotes, for the insurance. In this country, it costs about $900 a year for building, and there's about $300 of landlord and about $600 of building on an average residential home. But I would encourage you to inquire about that. But you can do the maths when you're comparing properties that are for sale by working out the rent and then taking away some expenses. Yep. And typical expenses in my country are what we call rates, which you pay to the local council, insurance, maintenance you allow for, and if you have a company manage the property, you can add that in too. So the insurers, how they calculate the premiums are probably simply on whatever business model they use to decide the risk versus return. Not all policies are equal. That's certainly the case. I'll mention a little bit about how they differ soon. But what I would do, Max, around working out and comparing insurance is really about the scope of the cover. And my article talks about some common things that may not be covered, so that's good to read and good to ask them. And it would be as relevant in the States as it is anywhere else. Excuse me. So what I would do if comparing properties is I'd go back a step and get the quotes for insurance, feel comfortable with what they cover, and then add that in as one of the expenses, because after you've taken your expenses off the income, you've got that yield. Yep. And that yield you just use to compare different properties. For example, a higher maintenance property that you feel you have to put more money into will have higher expenses at that part than low maintenance and so forth. If you need any more information about how to work out the yield, you could maybe private message me or send me something on Twitter. I'll send you a spreadsheet which is applicable no matter where you live. Yep. You can just adjust it slightly. So the insurance, I guess there's probably two areas where insurances tend to differ in terms of the scope of the cover. And by scope of the cover, what I mean is what actually happens when you go to make a claim. I guess many people can think about insurance companies and think, I hope they're going to pay out. Will they try and find a reason not to pay out? Those sorts of things, right? So the two areas in my country, at least, where they differ is the first one is about loss of rent. I'm talking just about tenant insurance. So the tenants stopped paying. They've run away to Brazil. We'll never see them again. And they maybe owe, let's say they owe $3,000, just for argument's sake. The tenants, when they take a lease in my country, they pay a bond, which in the States is called a deposit, I'm pretty sure. And that deposit is held, at least in our country, by a third party. Correct. By a separate organisation. It's returned at the end. Now, the insurance company, most insurers will ask that bond or that deposit is paid to them when they pay out that 90% of the rent that's owed to you. And you can sort of understand that because they're recouping their costs. But some companies will actually give you the bond back or the security deposit back. We've had 2 insurance claims where owners have had more money after making an insurance claim than if the tenant had actually stayed till the end of the tenancy because they got the bonds or deposit back. That may not be applicable in the United States. One that probably is, though, and one to be careful of, is to do with intentional damage. Insurance companies, and this is particularly about the excess. Let's say I smashed a hole in that cupboard there as a tenant and intentionally, and that's become a claim, an insurance claim. There will be an excess, of course. It varies from company. It might be $250. It might be less, might be more. Now, let's say I smashed a hole in this cupboard. Sorry, I'm trying to move my hands up to the right place. There, that cupboard there, and the wall up here. Okay, so as an owner, you come to visit, and there's the two holes. When you make a claim, insurance companies will do one of two things. Either they will charge an excess per hole, so that's suddenly $250 plus $250, so it's $500 to get those two holes fixed. Or if there's 6 holes, it's getting a lot more expensive. And some companies will treat it as one event. In other words, it doesn't matter that hole was made 3 weeks before that hole. They will only charge one excess. Yeah, which is great, because where you have a malicious damage claim, Max, to be honest with you, it's normally quite large scale.
Yeah.
It's they've had a party. There's holes in many walls, or tenants are just careless and don't care. We're talking worst case scenario, so don't get scared. But tenants are careless and don't care, so therefore they just smash holes over time in a property. So I had a man come into my office a couple of weeks ago. He had an insurance policy. He wasn't one of our clients, but he was coming in to ask us to help. He'd had an experience where tenants had smashed something like 10 holes in different walls and doors. It was going to cost him $2,000 in excesses, and if it had a better policy, it would have cost him $500. So he was in this horrible situation where the cost of the excesses was about the same as the repair job. So you sort of wonder, what's the point of the insurance, and that's where getting some good advice can be worth its weight in gold, even though insurance claims are rare.
But I'm sure you also run into a lot of real estate property owners who come from the maintenance side of it. So while somebody who's looking at it as an investment, they see, oh my God, there's a big hole, versus somebody who is a handyman or somebody who's in construction. They're looking at, okay, well, it's a hole. It's $10 to patch it up. So why would I even need the insurance in that case?
Yeah, and that's a good point. Something I often come across another time, Max, when people think they don't need insurance is, and I'll answer I'll talk about your thoughts in a moment, is that let's say I owned 10 properties, not one, but 10. Now, if I was insuring 10 lots of tenants at $300 or $400 each, that's $3,000 or $4,000 a year that I could be putting aside in case something happens. So some owners with multiple properties choose to what we call self-insure. In other words, they'll wear that cost. I would never suggest that, because there are some circumstances, and it depends how conservative you are, if you want to take the risk, and that's fine. I respect whatever people choose to do. I wouldn't, because what I've seen through my job, and I've looked after many, many hundreds of tenancies, is that certain things can do a lot of damage. And one of those is the drug, I think you call it crystal meth.
Correct.
Over your way. In Australia, for those who are watching in Australia, it's called ice, and in New Zealand it's got the strange name of P, which just stands for pure methamphetamine. Now, even using that drug can contaminate a house to the point where people can't live in it. Yeah. Experiences I've had have shown, just even from smoking it, not from producing it, but from smoking it, people have had to rip out not quite the walls themselves, but certainly have had to rip out, for example, in here, cabinetry would be damaged, curtains, carpets, and so forth. And the case I was talking about earlier, where there was $40,000 worth of damage, is the reason why I like to have insurance on my properties, because I don't want to have to wear that cost. The poor people that happened to, and I mean, I feel terrible about it. We did talk about putting the insurance in place. They just chose not to. They have taken this hit of debt, which they now have to chase a tenant for that money, and that they may never get it. If you have insurance, they would have got paid out. Now, what's also sad is that they're now selling that house. And I come across a lot of people who, through not having necessarily the best advice about insurance, can have a bad situation and then sell the house because they're sick of it, or it's too much of a concern. So it's good, Max, for having this chat now ahead of purchasing, because the great news is that the insurance is exceptionally good now.
Correct.
So yeah.
And I think it's very timely that you bring it up from the perspective of drug use is, I mean, I would venture to guess most people who are looking at investing in properties probably have not had personal experience with damage. Right. So it's something that would be completely out of left field. And now, are there any I don't expect you to know for the United States, but perhaps in New Zealand, if there was suspected drug abuse within an apartment or within the house, are there any certain disclosures that you have to provide for either the sellers, for the purchasers if you're selling the property, or for a tenant if you're finding new tenants for it?
That's a great question, Max. And the answer to that, at least in my country, is that if a house is found to be contaminated, the company that has tested that house reports it to the local council, the local regulators. Something is put on the record of that property saying it's contaminated with methamphetamine. And that's not removed until the house is cleaned to a standard or repaired to a standard that it's perfectly safe. And there are guidelines our government has released as to the toxicity, for lack of a better description. So if you're to sell a house in this country, someone can still look at that report, say it was contaminated, and now it's no longer, and that might be enough to put them off buying it. Realistically, I mean, it shouldn't, but that's the case. So we also have quite strict rules for real estate salespeople. So if they know something has happened at a house historically, even something like a fire or drugs is another use, they must let people know that. They cannot keep that quiet. But imagine this, Max, a situation where I'll mention why, if you're buying a property, in my opinion, you should always have it tested for drugs as part of the sort of the building report or part of that investigation. It's entirely possible that tenants at a property that have been living at a property are using, for example, methamphetamine, and it's contaminating the house. Now, in our country, a landlord has to give at least 48 hours, that's 2 days and nights, notice they're coming to visit. Even a methamphetamine laboratory can be completely disassembled in about 3 to 4 hours. We're now finding methamphetamine labs that are in a suitcase that they can just pick up, put in the trunk of a car, drive it around the corner, put away the evidence, and there's no smell, usually, or most often there's no smell. And so we can do an inspection and the house looks absolutely fine, but it's contaminated. So when those tenants move out and the owners decide to sell, the salesperson doesn't know, the owner doesn't know, we don't know, and the buyer doesn't know. And this has become a big problem. I know, sorry to talk about Canada for a minute when you're sitting in the States, but they had problems with leaky homes in Canada, where homes were built with bad regulations, they got water in them and that sort of thing. And people bought leaky homes and then they had to wear the cost of repairing them, or at least in many cases. Contamination with drugs is the same. I could go and buy a house tomorrow for $400,000, only to discover that tenants move in and get sick. It gets tested, and suddenly I might have $100,000 of repairs to do through not having it tested first. So again, I don't mean to scare you, because it is a relatively, I shouldn't say minor problem, but it's minor in the terms of the scale of it, right, the number of properties that are affected. But let's face it, when you're buying a property, you're usually spending hundreds of thousands of dollars. Yeah. So that's where there are things that owners can do. Mm-hmm. There are even devices that you can get, Max, that can detect the use of methamphetamine in a rental house. Another tactic or technique that we use is that we tell tenants that the home may be tested for methamphetamine at the end of their stay. Whether you do or not is up to you, but usually the fact that you say you're going to will mean that those sorts of people will stay away because of the legal implications if it's found. So scary stuff. I guess going back to the original topic of this discussion, the important thing is to be aware that insurance can cover these things.
It can. Now, are there
Yeah,
certain,
absolutely.
do you find that a lot of the carriers will put exclusions against certain items such as drug use?
In our country, they haven't yet, but I think they will,
Mm-hmm.
because it really is a growing problem here. At the moment, I think it will go from the realm. At the moment, you can make a claim under your building insurance for P, and the insurance companies. Because we talked about the intentional damage, and and building policies are designed more for things that are unforeseen, such as fires and earthquakes and those sorts of things, floods. But they're still paying out for methamphetamine to a certain limit on building policies in this country. It's certainly worth having the conversation with insurers. But what that will happen is that will transfer over, and in some cases it already has, to extra insurance, because the whole defense of an insurance company for not paying out on intentional damage is you put the people in there, it's your fault. Or the company that you employed has put people in there, so it's not, it's your fault. And that's why as soon as you have that extra insurance, that goes away, because you've covered yourself. So yes, there will be exclusions. I feel that it may become something which has got its own particular cover.
Mm-hmm.
So in other words, you can have malicious damage and then extra for drugs, because what's happening over here is more and more cases are happening, and therefore, if you imagine being an insurance company, you'd need to start saying, well, hold on a moment, this is getting a bit expensive.
Correct.
The cost versus return for us is simply not high enough. So I think it will change. The important thing, though, is to have the conversations with the insurance company to know the level of cover. And just to give an example, the person that had around about, and this is only an estimate, around $40,000 worth of damage from drugs, who chose not to take the extra insurance, did get a payout from their building insurance, but there was a limit of $25,000. So that's good to know, good to ask what that limit is. Some companies it might be 50. In worst case scenarios in this country of these clandestine methamphetamine laboratories being set up, it can be, some of the cases I can think of, about $140,000, $150,000 to put right.
Yeah.
So that's it's something which my staff are all trained to look out for, but however, if the stuff is so because of the chemicals they put in it. It really is a bit of a mixed bag as to what effect it might have on people. We had one lady move into a house, a lady approached me, if you don't mind me giving another quick scenario. A lady approached me and said, Greg, my son was living in this property that I own. He's now moved out. His friends are there. I don't feel too comfortable about the friends. Will you look after this for me? I said, yep, no problem at all, as long as you put some extra insurance in place, just to be safe. If you've already got a feeling that it might be going bad, let's pop that insurance in place. Sure enough, it did go bad. We moved those tenants on for not paying rent. When the new tenant moved in, within 24 hours, her eyebrows fell out, her eyelashes fell out, and she was getting a rash. Excuse me. Now, we had to move her out immediately. Because our owner took insurance, thankfully, that was all put right. The repairs at the house were done. It was made because that was methamphetamine as well. It was put right, but as well as that, imagine the period of time it takes or can take to do all this work. It can be months, and so that loss of rent paid for all of that rent minus a week's excess. So we were managing the situation, which meant that we took on board all of the actual day-to-day stress, which is what we do. Mm-hmm. But obviously, the owner was extremely thankful that she had insurance. Yeah. Now, to counter that, I can tell you that the incidences, and I've got 19 years experience, the incidences of bad situations are extremely rare. Yeah. They really are. But you find that if you ask enough friends and friends of friends, you will hear some horror stories. What we find... Oh, sorry.
I was going to say, but I mean, in those instances, what about the legal ramifications of now a tenant going back to you and saying, hey, you put me in this house, I should have known better, so I'm going to take you to court and sue you for everything that you've got? What type of insurance would there be limitations, or is that really where a big umbrella policy is going to come in?
No. That is included in the this $300 to $400 policies, and it's called legal liability, or it might have a slightly different name. It's accepted that when you're renting a house out, it's like a mini business.
Yeah.
So it's similar insurance to what a business might have if they do something wrong and cause somebody harm. Now, Max, you would have to know that there's a problem and either be not doing something about it, or the contractor hasn't arrived yet to do it, or whatever the case may be. So in the case of P, yes, if you put somebody into methamphetamine, if you put somebody into a house that you knew was unsafe, yes, they could absolutely sue you. However, I'd like to think people wouldn't do that. Another example of that sort of insurance would be, let's say you have an outdoor area that's got a deck, a wooden deck or a balcony, it's rotting, and you're thinking, next time summer comes round, I'll fix that up. And it's winter. Tenant goes out on the deck and falls through and hurts themselves. They'll sue, absolutely, or their insurer will sue. And that's where you have, it's called legal liability, and that's in the article as well, which covers, and again, the amount may differ, but here I think it's about $1 million. I think it's around about. And again, you don't need a really expensive policy to do that. Because what we find is the companies, remember before I was saying how you have your building insurer and they can add on the extra things?
Correct.
If you use one of the companies that only does the extra stuff, then they have usually the best policies and they just sort of fit in, because all this company here does is specialist landlord insurance. And what I'll do is I'll put a link into the chat as an example company. It won't be absolutely relevant to folks who are not in New Zealand, but the principles are very good for a company that just does landlord insurance. So at some stage, feel free to have a look at that. And for those who are watching a recording later, I'll put that down below. It's just an example. So
then basically here's a question for you, being a property manager himself. So as an investment advisor, we work with clients who invest in real estate. Some of them, they may invest in real estate themselves directly. And then you do have a lot of people who invest in real estate passively as a limited partner within either a commercial property or within a apartment complex with maybe 400 or 500 units. It could be a portfolio of properties, or it might be as simple as a couple of friends getting together and buying a house. So for those people, can you discuss basically why they should look at insurance and at what level of an investment should that be part of it, as either as a general partner or as a limited partner? Are they shielded, or should they be getting on that and really looking at that?
It's actually a great question, because it depends slightly on the way in which the things are set up, of course. If it is through a company, if you're investing in terms of buying shares in a company that's buying property or similar, then you'd need to look at the documentation that the company carries around liability and whether that can be somehow transferred. I imagine that if that company employed somebody to manage the apartment complex, for example, then the company would probably take that liability on board, because they're having somebody whose job it is to make sure things comply. Where it could get more difficult is if a few friends get together and buy some houses and form a limited liability company. That they just need to be very careful that blame, if you like, for making bad decisions can't be put back onto an individual particularly easily. And that sounds terrible. I'm not trying to dodge the bullet, but a real, if you do have a company or a trust, something along those lines, you'll probably need to get a bit of specialist advice, I think. I can't absolutely answer that question. However, if it was sort of just a group of friends buying a property, you'd want to be very sure that you're not going to be sued personally as one of the directors for making a bad decision, because that can come, or in this country, it could come back onto your personal belongings or your house and so forth. But it's all about how it's set up. Yeah. What we find in New Zealand, we have quite a different insurance system around the ability for people to sue, or the need for people to sue one another, which is a bit unusual. We have an overriding government body, organisation in other words, which pays out people when they get hurt. And all people in New Zealand contribute to this fund. And so if I was renting a property and I tripped over a hazard of some sort, a broken step, and broke my neck, I get paid out for that, not from the owner of the property, but from this organisation. Now, that organisation would probably chase the owner of the property if they found out that that step was, in fact, like that for the last 5 years and they've done nothing about it. So it works slightly differently, but in principle, it's the same. You'd still want to protect yourself against, in our case, this organisation suing, in your case, against the individuals suing.
And like I said, my personal thought and belief on it, particularly for the people in the United States, where, well, we live in a law-happy society. It's like where it's your God-given right that you can sue anybody for any reason, even if they just look at you wrong. So if somebody doesn't like this blab, they might potentially start suing. Hey,
yeah, don't sue me for this advice. I'll put a disclaimer saying that this advice is not to be taken as
absolutely.
It's my opinion.
So one of the things, definitely, the clients that we work with, for anybody who is involved, even as a limited partner, but if it's at a direct investment, such as in an oil rig or for direct investing in real estate, we would definitely recommend having an overall personal umbrella policy, because even though you might be a limited partner and you legally may not be responsible for it, but it's not going to prevent somebody from going after you personally anyway, and they can just sue you for whatever reason they want to do it. Whether they win or not is going to be a different purpose, but you're still going to be dragged through the courts anyhow.
Absolutely, and it's very, very similar here that you're best to. I mean, when we have situations with the one where I described earlier, where I was talking about somebody buying a house that was already contaminated with meth, and nobody knew. That's a classic example. If I was that buyer of that house, I'd be trying to sue everybody I could, just hoping, because the alternative is that I might have to pay $140,000 of my own money to repair it. So what we find is when we have a bad situation, people are looking, they try and sue the property management company, sue the insurance company, chase the person who's done it, just whatever you can, which is an understandable response, because it's it's a really serious amount of money. And
it's definitely it's definitely an unfortunate situation from the perspective of, I mean, there might have not been ill intent. I mean, it just might be a really bad situation, but no one really wants to be stuck with it anyhow.
Yeah, absolutely, and that's right, and so that's where fundamentally that's a problem in this country, similar to what leaky homes were in Canada, and we had leaky homes here as well, where people would buy homes that looked good, but then 5 years later they were crumbling or dissolving, and that was they were trying to sue the builder, who had most often disappeared, but the builders were building to the codes that they had, so they're trying to sue the council. The government told the councils what they should do, so they're trying to sue the government, because you're in that situation where effectively it's let the buyer beware.
Correct.
And that's similar to when you buy a house. Unfortunately, it's let the buyer beware. The only time that it's not is if someone should have disclosed something to you that they knew. But people who had leaky homes, for example, didn't know that they were leaky for years. And similarly, somebody could innocently sell a home contaminated with meth without realizing that it is.
Well, a similar situation, particularly in the United States, was in Florida during a housing boom in the early 2000s when, I'm not sure if you guys dealt with it in New Zealand or not, but a lot of the homes that were built cheap, they were built quick, and they were built with Chinese drywall, which was harmful. Anybody who's purchasing it right now, it's like, well, they're in a tough spot in that perspective. But going back to insurance, can you actually talk under which circumstances, for somebody who's buying a property or somebody who's thinking about buying a property, should they expect that they're going to get renter's insurance, or they're going to be able to get commercial insurance on the property? Or are there circumstances they might go invest in the property, they might spend hundreds of thousands or millions of dollars, then they go try to get the property insured, and the insurer comes back and tells them, "Hey, sorry, but we're not going to be able to insure those properties for you."
Yeah. So it's quite a long question. So I just tried to go back to the start there. I think when purchasing a property, and if you're looking at a larger, like an apartment block or something like that, if you have the ability to do what we call due diligence, right, which is a more in-depth investigation into the situation, part of that should include the insurance. And if you're in a situation where a deal comes along that's too good to miss, then I know it's easier said than done, but if you can have a due diligence, which is common in your larger ones, but not so much in your smaller residential homes or villas, then that just gives you more time to figure that out, because that gives you time to have conversations with mortgage brokers, financial lenders, and the insurance companies about what your plans are. With regards to the smaller purchases of say a number of residential properties, then it's simply a case where it's not commercial insurance. I'll come back to commercial in a moment. It's in this country. It is related to because you can insure well, let me put it another way. There is a limit where it does become commercial, if you like where you need business insurance effectively. That's probably the easiest answer. I was going to start saying you don't need to, but actually you do if you get a certain number of properties. And that's something that often a bank can advise on. You'll find you'll have personal banking, and then at some stage, if you buy properties, etc., they'll move you across to business banking. That's a pretty good sign that they'll also be talking to you about insurance and what you need there. So it's a bit vague, that comment. But if you were just buying a single property, particularly with the landlord insurance, the extra insurance, you can just get that on a case by case. But again, if you were managing 500 units in again, it's really a risk and cost versus return on whether to have the insurance or not. Yeah. When you start scaling up, there is a good argument for not having it. But I just wanted to talk before about a situation where the cost versus risk is much more appetizing, which is where you've only got a small amount of property.
Yeah, and under what circumstances or have you run into situations where the property owner was denied by the insurer to get a policy?
Oh yes, thank you. That was the other part of your question. I've actually never come across it, to the best of my knowledge. It is possible, though, that a number of our owners may have experienced that, but we might be unaware. You see, insurance is not compulsory. It's not compulsory to have insurance on any property in this country or to have any extra insurance. So while we encourage everybody to have it, if something happens at a property, sometimes we actually have to not only check our records, but check with them if they've got extra insurance and what the insurance is. So that's where we also have to be careful in my country not to give insurance advice, but the article that's in the link is of a general nature. Right. It's not saying choose one thing over another. It's just saying these are the things to be aware of. There's no one's been denied that I'm aware of, but you do, when you sign up, you do have to answer the usual highly insulting questions, like whether you've got a criminal record, whether you've made any unsuccessful claims, and so forth, which are some of the standard questions. But it's certainly not as in depth as, for example, health insurance or something like that. It's usually just 4 or 5 questions. For a larger purchase, depending on if it was a negotiated insurance deal, there might be more around that.
And along the same, the same topic, do you require your tenants to have their own tenant policies, renters insurance? Yeah,
that's a great question. Legally, we can't make them. A difference between rental leases between our countries is, my understanding, in most of the states in the US, you can negotiate whatever terms you want, provided everybody agrees.
Correct.
Now, that's a bit of a generalization, but that's generally how it is. So therefore, if you say to them they must have it and they agree, well, then you'd have a very good case if they then didn't have it and something happened, because tenants can also get liability insurance. I'll give you a really good example of that in a minute. In my country, it's not compulsory for tenants to have that. The agreements that are signed between tenants and landlords are governed by law. So there's a law which says what people can and can't do. We can't make them take it, but most people do. And what we find with renters insurance, to use that term, is that if people living in a house get contents, which they should, cover their things, if the insurance company knows they're renting as tenants, then they should also offer them, or it should also be automatically included, that they have liability. We had a situation in a city down south of New Zealand where 4 students were living in a house, and they accidentally set the house on fire through something like leaving cooking unattended or similar. Now, the insurance company paid that owner to rebuild the house, but that insurance company then went after those 4 young guys and made them pay a quarter each of the value of a new house. And that's one of the worst case but classic examples of why tenants should have liability insurance, because their insurance would have paid out. So the owner's insurance company would have talked to the tenant's insurance company, and they worked it out together, and everything's fine. So do they have to have it? No. Should they have it? Yes. So if you're a landlord, do whatever you can, wherever, depending on where you live, to put that in place. And in most of the states, you could insist on it.
Perfect.
In my opinion. Yeah. I'll have to carry on. I've got a meeting shortly. Thank you so much. It's been a great chat. I've really enjoyed it. In my next video, I'm going to be talking and teaching people about how to actually earn more money from their rental properties. So that could be something quite interesting too. So I'd like to thank you very much for joining in.
Thank you.
And we'll see.